Hello, I'm Robert and welcome to my channel where I discuss everything automated algorithmic trading or simply algo trading. If you've watched my short video already, then you know what a wild ride this market has been today. It has been incredible with a bearish onslaught that wiped out roughly 5 days of bullish profits. But that's not what this video is about. At least not directly. This video, I'm going to demonstrate very graphically in numbers what it means for the volatility this market showed. It's rare when I have an example this graphic where I can actually show how volatility really fits in the market. So let's get straight into the VPS and talk about what we have on the screen. We are looking at an Oanda Gridbot log. This is the kind of account I wish I had. It's a demo account, so I can test crazy things and see how the market is going to behave. This particular demo account was set up with a $50,000 balance, of which $20,000 is in play. Now, realistically, that is a very generous account, but it's not outside the means of somebody who has spent some time saving to get into the market. The goal of this particular test is I wanted to see just what would happen if I pushed the limits of the floating grid ideology. Meaning, this particular bot is very unique in that it has 237 levels. That is an insane amount of levels for this thing to keep track of. It takes advantage of every trick and gimmick I can throw into it to keep it above water and running constantly profitable. And it has not disappointed. Just within the first day of putting this bot online, it demonstrated a $60 profit. Since then, it has escalated drastically. And we'll get into the balances later on. But the point of what I want to demonstrate here and now is volatility of the market. As we can see, I've eliminated all of the buys and reductions. I only want to focus on the selling amounts. So we have the selling amount. We have the unit size that I am selling. We have the price that I am selling at. And we have the actual profit as reported by the broker for that trade. And of course, we have the running balance of the account, demonstrating exactly what is going on within the account. Now, as we can see from these profits, these are pretty uniform, within a reasonable level of standard deviation, within a statistical expected amount for what I am trading. So we can really get a good, clear picture of just how reasonably consistent the profits are within this process. We see a few on the lower end, and we see a few on the higher end, but nothing outside what you consider a statistical normality. But this morning's market did a jaw-dropping and impressive gap, and that gap really went in the favor of what I wanted to trade. That is, the market dropped hard. So let's begin to move down the chart and take a look at just how hard the market dropped. This is not a misprint. The market's volatility became so extreme that we had an $11 profit on 2023 units. This is just staggering how much volatility today's market experienced and just how powerful that gap was in the favor of my trading. But this is also a cautionary tale in that even though I got lucky and the gap was in my direction, equally the gap could have been against me. This is why you need to really think about your trading in steps. You need to focus on your trading in a worst case scenario approach. This very situation highlights the critical importance of worst case scenario planning. I got very lucky here in that I made money on this transaction, even if it was a demo account. If this had been a live market account going against me, this would have hurt my budget drastically if it was a gap going in the opposite direction. You need to always prepare for the circumstances when your orders aren't filled as fast as you want because of market gaps, and you can't predict them. There's nothing in the market that suggests a market gap is predictable. It's not. This also highlights the fallacy of backtesting because the backtesting process itself creates a level of normalcy that just doesn't exist in a real market. Always understand that backtesting is nothing more than a proof of concept approach. That is, does this strategy show promise to be profitable? That's it. Once you can get a yes to that, you need to move to a forward testing environment where you can see just how insane, just how brutal a real market can be. As we continue looking at each of these trades, and we see the impressive level and the brutality of this gap in play. This is just staggering in terms of how much profit this account racked up because of this gap. And we can see very clearly, and the irony of it is exactly what time UTC this gap took place. It took place between 12:26 and 12:31. So when you're examining your logs, keep track of situations like this. Always pay attention to these gaps because these are indicators of market pressure, indicators of buying and selling, and the likelihood of a significant correction. If you're lucky enough to get in the beginning of a gap and catch it the way this bot did, it will make some very nice profits. If you're unlucky enough to be on the wrong side of the gap, it is going to hurt. Make no mistake, it will hurt having this kind of a gap go against your trading. This is what blows out stop losses and liquidates huge sections of the market. There's countless videos on the internet and on YouTube from professional traders that talk about this very situation, where people put their stop losses too close. There's no breathing room. This is exactly what that means. You have to give the market room to breathe, because if you don't, a quick gap like this could wipe out your account easily. So always, always, always plan for the worst case scenario. We can see right away where the volatility spike hit, how it's continued, and then you can see where it's beginning to taper off in the profits, meaning the gap is beginning to shrink again. Never ever try to predict the market. Always plan for a market to go against you in a worst case scenario. It doesn't matter if it's stocks, cryptocurrency, or Forex. This type of a procedure can happen anywhere. So we can see as we continue scrolling through the log how the gap is shrinking and how the volatility is beginning to calm back down. And now we're starting to get back into a reasonable level of what would be considered the standard deviation of profitability for this account. As you can see here, we're back to 34 cents. So we're looking at roughly 1 hour. Actually, not even that. About half an hour of full volatility within the market. 1231 to 1301. Where the market just went wild. And within this half an hour, 5 days of profits were wiped out. So if you were a bull sitting in this, I can only imagine what you were doing. Probably panicking if you weren't thinking about the worst case scenario. If you had a worst case scenario, then this was nothing more than a blip in your trading. But most people don't think about this kind of situation. And to be able to capture it so graphically, this is impressive. This is what trading is about. Normally, I would say you should never be excited about a trade because you need to maintain a consistent psychology within your trading. But from the standpoint of the demonstration of a real-world example of volatility, this is exciting. To really see it working in a live market context is impressive. We can see the volatility is still teetering a little bit higher than normal, but it's still not that bad as we continue going through the trades. And we are finally at the bottom of the log where the volatility is pretty much just slightly elevated. Always plan for the unplanned. And that sounds like something that's impossible, and it really is. But that's the point of accumulation. That's the point of aggregation. That's the point of multi-position trading. Think about your worst case. Plan out every single trade in levels. Think about when you want to enter, when you want to exit, and the type of strategy you are using. What will happen to your strategy if you hit a volatility bubble like what this bot demonstrates? Even in my own live real money bot, this volatility level was a very nice bump in my budget. Nothing like this because I don't have that kind of money. But still, considering what my bot was doing, I am very happy for today. But I can't emphasize the warning of being prepared when the market goes against you. This kind of a gap going against you is brutal. So let me know what you think about today's market. Share your thoughts. Leave me a comment. Which side of the gap were you sitting on? Were you on the side that made money from it? Or were you on the side that took money from you? If you like this video, please leave a comment. Share your thoughts. Hit that like button and help me grow this channel. Thank you for watching.